Shop Talk, baby. This is the show where it's okay to be you. We're talking from Yale to jail and from the church house to the pimp house. Nothing's excluded on Shop Talk. So if you don't have a phone, I suggest you borrow one. Call in and voice your opinion live every Saturday morning from 10 a.m. to 12 noon. Yeah, that's right, 10 a.m. to 12 noon. Don't forget to Shop Talk with your girl, because right here, we keeps it real. Hello, hello, hello. How are you, Miss Lady?
Good.
You good? You sure you good?
Yes, I am. Sun is shining. Wonderful.
All right. That's what we care about. That's what we care about. Well, today on Brown Skin, I would like to welcome you lovely people to Brown Skin. And what we are going to talk about today is generational wealth or a come up. And my guest today is the lovely Bonita Starkey, who is the CEO of Keystar Insurance. Keystar Insurance LLC. Let me be correct. Look, politically correct. I want to thank you for coming on today. So thank you. Anything? You talk to me? No, I'm like, anything? Talk to me. Today is International Women's Day. Oh, so we're aware of that to the listening audience in case you did not know. Yes, it is. It is International Women's Day. March is the month. The entire month is geared towards celebrating women. So get your life, okay? And know what's going on. And what we are celebrating is the economic, social, cultural, and political achievements of women. And right now we got a great one this year with Kamala Harris. Are you excited? Talk to me. They can't hear you, honey. I'm like, you gotta talk to me because they can't hear you.
Yes. It's quite an accomplishment.
It definitely is.
It's quite an accomplishment.
It definitely is. I wanted to bring you on and have you on the show because a lot of people who don't know Bonita, she is actually what we've known as the insurance man. She is an insurance woman. So kudos, let's get that going. Look, I'm like, kudos, let's get that going. Where are my little sound effects at? There we go. A phenomenal female is in the building, okay? A phenomenal female in the building. So thanks for coming on. We wanted to acknowledge the trailblazers. That's why we are celebrating the entire month. So I want you, Bonita, to tell us a little bit about yourself.
Well, I'm Bonita Starkey. I've been in the insurance industry for 15 years now, located downtown Youngstown. And I've dedicated my career to teaching individuals about insurance, particularly life insurance at this time, but because we just don't have it. I think that people have been misguided, have been misled about it, and tend to not use it for what it's worth and thus don't get the full effects of it to protect their lives as they should and could, because it does offer a lot more things now. It's not just for a variant.
Okay. I know that you sell home, auto, and life insurance, and you also specialize in financial literacy and building wealth. That's what caught my attention.
Okay.
So let's talk about that. We're going to pin the home, auto, and life because I want to talk about that as well. But specializing in financial literacy, you said you like teaching. Tell us more about that. Tell the listening audience about that.
About my teaching?
About the financial literacy.
Well, we teach these classes to teach individuals about the things that they do need to be more well-rounded, to be more prepared, to not have the families fighting, after someone passes, and to escape the financial devastation that people are just too often encounter. After the funeral, life still goes on for those individuals left behind, and we as a people need to prepare a little better. Prepare better so that the plans can go on, so that our children can continue to go on to college and thrive, and to not have to, and our wives don't have to, well, people with wives.
It is there. It happens. Go ahead, wives. People with wives. What about the husbands? Don't leave them out.
Don't have to return to work. If that is, in fact, the way that they were doing. I mean, I don't want my husband on the curb, if something should happen to me.
And it happens.
Too often.
I'm liking it. Definitely happens. Now, you also do in building wealth. Let's talk about the building wealth part.
Okay, that's a concept known as infinite banking. Okay, what we do there is we teach individuals to use their life insurance policies, to use the cash value on the life insurance policies to live. Okay, this is in lieu of borrowing. In this country, we were taught to borrow for everything. It's the American way, and it keeps us in bondage. It keeps us bound to these bills because of, inflation, number one, but because of interest and taxes, which are the number one killers of wealth. So that concept kind of eliminates or tapers down as much as possible those expenditures, those costs, the cost of what else?
Go ahead.
Interest. I'm sorry.
That's okay.
On the interest, and allows us to earn more money while the money is just sitting. It used to be that mom would just put the money in a jar. Problem is, when you go back to the jar, you still have the same amount of money. Okay? With this concept, not only do you save money, but you build on that cash that you have there as well. And it's tax-free.
Okay, so that's once. So, okay. Let me put this in lay terms and you let me know if I'm right or wrong or correct me, okay? So, you get insurance and you have money set aside for, is that what you're saying? And it's tax free? Like, don't you got to report everything to Uncle Sam? The I, the R, and the S?
No.
Okay, talk to me.
It's life. It is life insurance. It is life insurance. So, permanent policy, which accrues value.
Okay.
Heard of cash value before?
Now, yes.
Policy is a high equity policy. Therefore, the cash value in the policies are greater than a normal life insurance policy. Of course, it costs a little bit more as well. But you're sowing into this policy, and you earn money on top of it. So it's available there for use for whenever you need it. You want to buy a car? Okay, let's say for your son or daughter, you go get $4,000, $10,000 out of that policy.
Also, it's like a 401k.
Yes, can be used in that fashion, absolutely.
Okay.
No borrowing totally eliminates the need for traditional financing, which means no interest. So instead of paying interest, you're earning interest because of the high equity, because of the high interest accumulation and compound interest on the policy.
Now, I'll just say the names because I'm sure the listening audience and the viewers are probably familiar with like the Gerber insurances and things like that. What's the difference? I know like the one that you're talking about, that sounds pretty good, but there's another one that you pay and you can't borrow against it. Is it like term and...
That is a term policy.
Oh, okay.
Now, there is a need for all of these different types of policies. It just depends on where you are in your life and what you're trying to protect or what you're trying to achieve.
Okay.
Now, term is good for somebody who has young children and wants to make sure that they're taken care of if something should happen to them within that amount of time. Or let's say, for example, you purchase a home and you have a 30-year mortgage. You want to make sure that if something happens to you within that 30 years, that house can be paid off, that there will be money to cover that and the deal will go on. As I stated before, your wife and children or husband can continue on with that home. Just go on and pay off that 30-year mortgage, go on and pay off the mortgage.
Okay, so what happens when somebody passes and you think that they have their home and all that good stuff, and you're like, okay, well, they passed away. Not everybody. I'm just, for the sake of conversation, on brown skin. It's like, okay, this person passed. Who's getting the house? Everybody's fighting. Then nobody gets the house. And that is because of not being covered.
That is because there wasn't a will in place. We need wills in place in order to distribute our assets the way that we want them to be distributed.
Okay.
And that's something else that we're offering here is a estate plan.
Okay.
Estate plan. Okay. Now the individuals can get that free with their policy if they qualify for a policy from this company, which is pretty liberal. Okay. And with that comes the will, the estate plan. The estate plan includes the will, the power of attorney, which means that if something should happen to them and they're unable to pay their bills, they can say, okay, one child or a sister is more responsible than the others, and you're confident that that individual would definitely pay the bills as they should be paid and not squander the money, then you would want to put that person in charge, And that would eliminate the struggle between the siblings about who's going to do what.
Okay, but what I'm
already said, it is set in stone.
That's it. Well, yeah, and you still have a problem.
How it is.
We see the problem still exists. But I'm talking about the when someone, how they just automatically think somebody passed, it automatically comes to you. But if they don't have that type of insurance where everything is paid for, it's like you could take over the loan, like a car loan, for instance. People think once you automatically pass that everything's paid off, that person is passed, they're dead free, and whatever they have left is yours, and not realizing that, yeah, you could take over the loan if you want that, but they didn't have that type of insurance that says, okay, if something happens to me, like you were saying, a 30-year. So that type of insurance where if something were to happen to me, God forbid, I'm just using me as an example, that everything is paid off and then it goes to whoever I appoint. Okay. So that's something totally different that they need to discuss.
That's totally different. In that case, that car is going to go to the estate.
Oh, it don't go back to the dealer.
Whatever is owed on that car is going to be taken away from the assets that the individual has to pay off that debt.
Okay.
So if mom did have a house and she has large bills, she's large debts, then that house may very well have to be sold to cover those debts after she passes.
What?
So it takes away from the family after the fact.
Now, look, now that I said that, examples of debts, like medical bills?
I don't know so much medical, but definitely credit card bills, like we said, the house, the car, just debt. We have debt for everything. We have debt for school. I don't know the legalities as far as can they take from your estate for
student loans?
For student loans. But like I said, we borrow for everything. I want to go to school, get a loan. I'm getting married, get a loan. I want a car, get a loan. Doctors graduate from school and they go to get an office, get a loan, go get all these like X-ray machines that you need. And that this country is designed on that. That's capitalism.
Okay.
It keeps you indebted to them at 20%.
Well,
we're going to loan you money, and then we're going to charge you money for loaning you the money.
Okay, I heard you say weddings. Listen, I got to tell my listening audience this. Don't get a loan for a wedding. I'm telling my listening audience, don't get a loan for a wedding because that's ridiculous. That is.
You could be more aware of that, but I've heard people. You're familiar with the Cinderella ball.
Don't get a loan for that. Like that is here's my thing. Honestly,
priorities.
Listen, if you gotta get it, yes. If you gotta get a loan to be a part of something, you can't afford to be in it. You don't need to be a part of it. If you have to get a loan to have a wedding, you shouldn't be having a wedding. Revisit that situation. You know what I mean? You could go on down to the Justice of the Peace, do what you have to do. everyone isn't blessed. I get it. Like me, I wish somebody would have said, okay, I'm gonna get a loan. I wish I would have came, and if I would have said get a loan, my parents probably would have been like, what? Please. You know what I'm saying? For a wedding, no, this is the budget. This is what you're gonna do. Here you go. Get a loan for a house. Like, who's gonna pay all of that money for one day? It's amazing, though, no lie, because I had a wonderful wedding. However, it's not gonna be that wonderful for me because the way that I am, the way that my mindset is, I'm looking at plates. I'm like, I hope they pack that up and take that with them because I got to pay for it. Like, don't waste my money. And especially now. So that obviously that triggered me.
I see. Now that's a whole different story there. There's reasons, there's psychological reasons that people feel like they have to do that. And sometimes, a lot of times, it's not just for them. It's because of who's looking at them.
And that's crazy. And then something happened and they passed and we be like, well, you done had this fabulous life and you ain't got no life insurance. Now you got to go find me. That's the stuff that I'm talking about. Priorities.
Well, people want it now. It's the, I want it now. And if I don't have it, at least I can look like it, right?
Now that's true. You have people that fake the funk.
That's just not proven everywhere.
So, look, no shade to those who want to get a loan for your wedding and all that other stuff. If you get with Bonita at Keystar Insurance Bank, Insurance LLC. Look, banking, because she's going to tell you about the money, okay? Visit the website at keystarinsurance.com and ask about the insurance that you can borrow from with no interest if you want to take out a loan. And if you decide that you want to go to the debutantes and all that, and being that we are heard worldwide, which is amazing, thank you, please visit her website, okay? And she is, I was going to say stationed, Lord have mercy. Her brick and mortar is in Youngstown, Ohio, the hometown of Mel from Shop Talk with Mel. But we got the whole world listening, lovely Bonita. So I want you to go into detail a little bit more on the term versus, what's the other one? Is it life?
Whole life. Those are the
Whole life or term, because I get them confused. So okay. Tell us about the term again.
Okay. Term is a policy. It's a little less expensive. You get much more coverage. But it's only for a term of time. It can be 10 to 30 years, depending on what you choose. But after that 10 or 30 years, no more coverage.
Wait a minute. Wait a second. See, that's why I get confused. So 10, 20 years, I can pay this little policy, 30 years, pay this policy.
How old you are when you acquire the policy. The older you are, the less time that will be available to you.
So you're telling me after that time, and if I still live and nothing happens to me, that money is wasted?
Yes. Well, if you want to call it wasted,
I'm just keeping it real.
It wasn't wasted.
Well, to me, it was me personally.
You get a whole life policy.
Yeah, I need a life policy because what about my little, you have where most black people, and let me put this out here, and me being black, I'm talking, okay? Most of us value life insurance, especially like our ancestors, as generational wealth. You want to leave something for your offsprings. Now we're going to fast forward into 2020, 2021, where people will leave the money and they're like, 5 minutes later, the day after tomorrow, they blew through it. And you have, Big Ma and all of them who had a fixed income and they put money aside just so that they can leave something versus what's going on now. And in this generation that I look around and I see where insurance is not important. It's just like, oh, okay, let's just do what we do willy-nilly and call everybody and say, hey, we need this to bury so-and-so. And as you said, as you so eloquently said, that people are doing things so that other people can look at what they're doing. How embarrassing is that, where your family got to do a GoFundMe and you rolling around in your Mercedes, your BMW, and all that other stuff?
It should be. It should be, but it's priorities. It's priorities. And then, okay, at the defense, there are some people who just don't know. And a lot of times when we don't know, we just tend to shy away from things. Like I said, like you're asking, okay, that the differences between all of these different types of policies, what options are available to them as far as payment options, what things can I do to alleviate, to bypass some of the problems. And there's a lot of crooks out there too.
Yes, there is.
Mm-hmm.
Yes, there is. Because you have the insurance man that used to come and knock on the door. I do remember that. And you'd be like, okay, what you want? Come to pick up that little $20, $30 a month. And then you don't see them anymore. They went out of business. I need a brick and mortar. I need a place. So if you want that, look, I'm like, so if you want that place, I need you guys to visit Keystar Insurance. The phone number, I'm going to give the phone number out for those who may not know, or they're, like me half the time on the internet and like, hey, wait a minute, what is it? I can't remember. The phone number is 330-423-0220. Again, it's 330-423-0220. And you can ask for Bonita. I'm sure she'll answer your questions for you. I remember years ago, and I don't know if you remember, do you remember coming to my home?
I do not.
Interesting, yeah.
I do not.
Mm-hmm. You came to my home years ago about insurance for my 2 little children, my little people.
Oh.
Look, my little people. They're grown, 25 and 23 now. Yeah.
Oh, so that was some time ago.
It was some time ago. I even looked at it. I should have pulled it up and said, look. Yes, it was some time ago. Mm-hmm.
Okay. And that's one thing I want to say as far as the brick and mortar is concerned. What we definitely want to know who we're doing business with. But also important is the company. Okay. Whether Bonita goes out of business or not, Gerber has been there a million years and they're going to continue to be. I don't deal with anybody that doesn't have such a reputation. So that's the important thing. If Bonita goes away, first of all, I'm not going to show up to pay for Melanie's funeral anyway. That's coming from Gerber, right?
Right.
They are going to be there. I'm just your trustworthy person to help you to figure out what policy is best for you and what things are there that you're not, bypassing things that you can't have. Like I said, like this estate plan, I'm really excited about that. Because we just don't have it. And it's a part of a financial plan. That's a really good start. It's a great start.
Okay. Let's go to our viewers. You ready? You okay with that?
Ready, yes.
All right. Lou said we need to know how to protect our assets. And estate giving and philanthropy, legacy giving needs to be discussed too. And that is the truth. He is right about that one. Because that's what we're talking about with the generational wealth. But you have to raise them to know. Is there an age limit on when you should be talking about insurance?
No. I believe it early as possible. Though, when we're presented with those things from our families' practices, just the way of doing things, we tend to adopt those things. My dad was a stickler about smashing the milk jug in the, before you throw it away.
Mm-hmm.
I still do that. And I'm sure you have some things that your parents did that you just do sometimes just because they did. My mother always made yellow rice. I still do to this day. I never make white rice. That's just that's the way it was. That's the way it is. And if that is instilled in you. Now, for me, that was my father and my grandmother.
Okay.
Were huge savers. So I have always have been. I enjoy it. It's, well, more than anything, the thing my dad told me is that you have to enjoy looking at your money in the bank more than you do spending it. And I live to this day.
I like that.
You have to live like a pauper either.
I like that. And I do enjoy seeing my money in the bank. I do. It's a whole different...
Even the ability to be able to take care of problems or to go get a dress when you want to, it just ain't get better than that.
It is. It's a different feeling versus...
I have to wait for 2 weeks. I get paid next month. I got to ask somebody for it.
Now tell me this.
Those things happen.
And they do. And they do.
It's discipline. And unfortunately, people tend to look at discipline as something that's holding them back. But it actually frees you up. Frees you up. It allows you to move forward in a cadence, in a structure, in a strategy. A strategy. You're just not going to spend all today. You're keeping in mind the future. Or tomorrow, or that something could happen. Now,
I do want to share this with you because, and I love to speak to my generation now because they're like the microwave society. They want everything right now. The BBLs. Do you know what BBLs are?
No.
Me either until like 2-3 weeks ago. Okay. BBL is Brazilian butt lifts that all these young girls is getting now. They're leaving and they're going probably to Florida or whatever. And everybody has like the lift now, the mass lift, which is different for me. But they're going and they're spending all this money and they have a payment plan. Can you give your information where they need to, and I feel as though they need to reach out. And if you're getting ready to have some type of surgery, please hear me well. You need to make sure you have some insurance. You need to make sure you have some insurance. They have all the different GoFundMe. I'm stuck in Atlanta because of the All-Star Weekend. Now, I used to kick it back in the day, the All-Star Weekend. They got the GoFundMe for Come and Get Me. You know what I mean? Help me out. Help me get back home. Help me get some Beyonce tickets. This is like, I watch this stuff. And this is the no judgment zone because your girl, I don't judge you. You just do, but just be prepared. And that's my thing. Just be prepared. They always saying she ready. She is not ready. Because if you're getting ready to go and have surgery, is there a time limit? This is my question for you. Is there a time limit that they need to be covered? Like, okay, so I'm coming into you. Let's say I'm a customer and I come into you and I know I'm getting ready to have this BBL done in maybe 2 weeks or in a month. And I say I need insurance. How would that go?
Well, you would just...
Not that I plan on dying.
That's cosmetic. That's not a sickness. Only a sickness, something that could shorten your life expectancy, would delay the process. But for the most part, these days, there is a company that will insure anybody. It's the how much do you want to pay for? Okay. Now, I want to tell you about an uncle of mine who I spoke with a few years back about insurance. Would have cost them about $54 a month. And I said, well, how much coverage do you need? He said none, and he laughed, and we giggled about it. Okay. A couple of years later, all right, he had a stroke. He ended up paying $150 a month for that same policy that would have cost him $50 because of that stroke.
The illness.
Correct.
And that's a chronic one.
We think that we have more time and we want to hold off, but we never know when. But the longer you wait, just because of age, you're going to pay more. But God forbid something comes up, including COVID. There's a whole a page all for it by itself.
Is it?
Life insurance policy, yes it is.
So,
yes, it is.
Okay. So tell me a little bit, for people who had it, because it's like 90% of the population has had it. So how does that work?
Well, it's just a little more that they have to go through. How severe was it? It's just more questions and possibly a upcharge in the premium.
Okay, and go ahead, finish it.
After it's gone for a certain amount of time, just like cancer, let's say that you're cancer-free for 5 years, it's almost non-existent. The thing is, how recent was that sickness?
Okay.
The more recent that it was, the higher the likelihood that complications can arise from it.
Okay, so I'm glad you brought that up too. And sorry to hear about your uncle. Clearly, there's race-based inequalities regarding health insurance. Is it that, and I know that because I'm in that field, is there, and I heard you say as far as like the price, do you see the pricing of like even auto, home, and life, you share that there is a price increase. Do you see that there's price inequalities? And broadly, not speaking of your insurance, company.
Life insurance so much, a little more for home and auto based on where the home is. But there are other factors that are in the control of that individual, such as their credits. But if they live in a bad neighborhood, chances are there are more break-ins and stuff like that in that area. So the likelihood that their premium would be higher is, that's real.
So what about if you...
That's not necessarily black or white. That's more of an economic thing. Makes sense?
It does. It does, because...
Where you live, and crime rates are higher in this area. Mm-hmm. So the potential for a claim is high.
Okay.
Now, if you've misused your insurance, your homeowners and auto, just making frivolous claims, claim, that is going to come and bite you, whatever color you want. That's not based on color. That's just practices. People tend to look at it as, I'm paying for this every month, so I'm going to use it, but you are going to pay for it. Insurance companies are in business to at least break even. So whenever you use that policy, they are going to charge you more so that their output at least equals what you're paying. Otherwise, they couldn't stay in business.
Well, clearly. But that's what I was saying as far as like with term. Take us back there where it's like, okay, so is that money wasted? And I understand that it's a company and insurance companies are in business to make money. Even, do you remember, I'm dating myself right now, do you remember when we didn't have to have insurance?
Well, I didn't hear about insurance until I first moved out of my mother's house as far as getting automobile insurance.
Okay. Well, back in the day, you didn't really have to have auto insurance. And I'm speaking auto insurance. That's what I'm on that one. And then it's like, okay, you have insurance. There was a liability. You have the...
And it wasn't mandatory.
Mandatory. Yeah, I'll put it that way.
Okay, I see what you mean.
And it's like, oh, okay, we get to drive and you didn't want to hit somebody's car, so you get sued and they take everything that you have. So you're like, okay, well, I'll use the insurance to protect me.
Correct.
Now, it seems as if you're using the insurance and just as you're saying, like all the frivolous claims that are out there and you're paying. And when somebody hits you, it's their fault and they don't have insurance now, which is mandatory. You are penalized. You're penalized when they didn't have insurance and you did. You understand what I'm saying? I'm not okay with that. Well, I'm going to tell you exactly what happened. So I was at the red light, right? And I got my insurance. I'm good. This car didn't stop at the red light. Bam, hit me. And adrenaline going. I'm upset. I didn't ready to jump out the car. My mother's in there because you're worried about everybody that's in the car. And they backed up. And I think when they tried to back up, they hit me again. And then they backed up and then they took off, but they had personalized plates. So that was easy. Yeah. To look and see the plates. However, they didn't have insurance. So now it had to be turned over to my insurance. This was like 6-7 years ago. And then my insurance ended up going up because I had to report that claim because the car was messed up. I thought it was just totally unfair. And they didn't have insurance. And it was just like, oh, okay, well, they don't have insurance. And it seemed like nobody saw the sense of urgency except me where I wanted to go after these people.
Uh-huh. Yeah, no, you shouldn't have been charged for that.
It went up.
They were truly cited for that accident.
And it was a hit and run. And I did all the work, me and my child. Looked up the personalized plates, the whole nine, and turned everything in. And then they found out that there was no insurance. But I got a card that's inoperable. And I had to turn it in. So, of course, it's like, okay, here we go. They pay. I didn't have to pay the deductible. But still, I put it this way. I felt like, yeah, it was my fault. It turned out to be my fault. You were in an accident during this time.
No, it's still not your fault. That's not your fault. Those are two different things. You gotta get on them about that.
Yeah, right. I need to call you. That's what I need to do. I need to call you, huh? Because my insurance company doing something. Okay, girl, you better sell your stuff. Look, look at you sitting here. So you said that there is really not a change now with as far it just depends on the area, like the urban area, depending on where it was the crime area. So it's based on where you actually live.
Right. Okay, so in that case, that's beyond your control. But these other factors that do increase your rates are within your control, which is like we said, making the other claims and your health even.
Okay.
Those are all things that increase those rates.
Now, does your company go out? Because I know there's some insurance companies that go out and have a nurse do an assessment on the individual and then come back, or is it just you pray to people telling the truth?
Mm-hmm. Well, I represent 13 companies. I am a broker, which allows me to work for my customer. I don't work for one, which is called a captive agency. Mm-hmm. Company like State Farm. They can only sell State Farm, so they're trying to make everybody fit in this hole, and that's not the truth. Mm-hmm. We have different situations. There are different reasons that people need insurance or, want it. Some have kids, some want to preserve their wealth and build, like we were just saying. There's a myriad of reasons and things that this policy can do for you. And each of those companies satisfy. It's like if you want a burger, you don't go to Red Lobster. They have them, but
you're going to go with somebody that specializes in it.
Exactly.
Okay.
So that's where a good agent
tell it
can help you out with that.
Okay. I got distracted. Open that jacket up. Let me see that necklace. Oh, I like it. I was sitting there looking. I'm like, okay, I like it. Look, yes.
Thank you very much.
Yes. I like it. Hey, for your insurance needs, questions, and she put it out there. She said she is a broker. She has all the answers. Bonita Starkey, 330-423-0220. Again, 330-423-0220. Keystar Insurance. All right. And visit the website. Feel free to do so. Go look around, and then you can see her pretty face too. Okay, it's KeyStarInsurance.com. Keystar, the normal way. KeyStarInsurance. Nothing fancy, okay? KeyStarInsurance.com. Look around. If you have questions, now's the time to ask those questions, to be honest with you. Now's the time to ask those questions. I hate to be on the dark side. What'd you say?
I wanted to say also that I am having a workshop, insurance literacy workshop.
Okay.
Called Your Ducks in a Row, which is going to be on February 20th, so Saturday.
February?
Not February, March. I'm here to look at my studio audience.
Yeah. Listen, the studio audience will have you distracted. I already know. And you'll be like, oh, what? Looking away? Yes, but it's in March. March what?
20th.
March
Saturday,
20th.
March 20th, 2 weeks.
2 weeks? Okay. Is it going to be virtual?
The website, www.keystarinsurance.com, and look for webinars.
Okay.
Under there.
And is there a fee? There's no fee.
No fee.
Oh, well, look at God.
Question and answer session after that. Just like you're asking me, everybody's got a question. Everybody does.
Awesome.
I'll talk about a lot of the things that we're talking about here a little more in detail. But to answer your question about the physical, that depends on the condition and the policy that the individual is given.
Okay.
The worse your condition, the older you are, and the more money that you are requesting, those all increase the likelihood of having to submit to a physical.
Okay. Okay.
Now, let's say this, for example. Let's say $200,000.
Oh, like a Lifetime movie. Go ahead. You be like, I want to increase my insurance this week. You're like, what's going on? Go ahead.
Okay. If we have a 30-year-old and a 70-year-old applying for this same policy, chances are that 20-year-old will not have to have a physical. They don't have any issues right now. So policies are really given to people who like that. It's very seldom, it's very unlikely that those policies pay out. Okay. Because these people are in such good health. After 60, you can't get a 30-year policy. So you don't get 20-year.
So it's best to start young, get a policy, and keep it. Absolutely. Now, when you borrow against your policy, let's talk about that. When you borrow against your policy, and you die the next day, this for the sake of conversation, I gotta be me. For the sake of conversation, what happens then? As long as you don't borrow the whole amount, or like, how does that work? Okay, you were talking about passing the next day. Mm-hmm, that happened for real. So, I don't just like pull this stuff out the air. But it would definitely be an investigation. Okay. Now, if the person was sick prior to and was not truthful on that policy, then it does not have to pay out. If they had cancer and didn't report it, or some. I'll tell you the scenario. Okay. The person borrowed against the policy for the house, and the next day they just fell flat on the kitchen floor. I don't know if it was like the stresses. I don't know. And they actually passed. And then there was no funds for the actual funeral. So I think they borrowed against the policy probably like a week or two before they could actually put it back. You know what I mean? But then boom. And then it's like, oh, wait a minute. I just cashed in the policy to do this, and then they passed away. And now what do I do? Correct. So that would be subtracted from the benefit amount. Okay. That sounds like a plan. Any outstanding balances from loans will be subtracted from the benefit amount. That sounds pretty good, though. I mean, I know that's... Look, I'm always trying to make $1, right? Especially out of 15 cents. But really, that sounds all right, because it's like you don't have to, like you said, go and get a loan. It's like, okay, here you go. But you need to pay that, though, because we know the inevitable is going to happen. It is regardless. Going to happen. That's our motto here. Okay. To protect from unforeseen and inevitable dangers. Yes. Now, that's something totally different. That's what I was saying as far as the different reasons that people get insurance. Somebody who's younger, or, hairdressers, or people like myself who doesn't have a 401k because I'm in sales, then we want to prepare. We want to put some money aside now that is going to grow for retirement, so that we have that to fall back on during retirement. Okay. Now, let's talk about this order come up. Now, I remember before they'll be like, okay, well, I'm going to get a policy on this person. They could just call in and get a policy on somebody reckless out. You'd be like, your nephew, your cousin, grandchild. You'd be like, okay, I'm going to make a come up. How does that work? Is that still going on? Are you still able to get policies on other people? If they're over 16, they have to agree to it. Oh. They have to give permission, but so long as they give permission. Now, that depends, too, on your relationship with that person. Okay. Okay? Life insurance policies were designed to be to replace finances for the primary breadwinner, or somebody that you're depending on for finances. Mm-hmm. Your husband, any caregivers, anybody that is depending on you or that you're depending on for finances, you should have a policy on it. Okay. You should have a policy on them.
your mom is going to pass. She is going to have a funeral, and guess who is going to pay for it first? Before you go to GoFundMe, it has to be paid. There needs to be a policy on mom.
Okay. Or money in the bank. Look, I'm like, or money in the bank to say, here you go. Now, most of us don't think that it's necessary to have policies on children because they're supposed to bury us and we're not supposed to bury them.
Well,
let's talk about that.
But we should have a policy on it. We spoke earlier about teaching your children about insurance and preparation. Mm-hmm. It is a part of your financial plan here. Mm-hmm. We want to set them up. If you get their policy started now and they're paying $50 or whatever it is, depending on how old they are, let's say if they're paying $25 a month, when they're 85 years old after 3 strokes, they're still going to pay that same amount.
Okay.
So you're giving them a head start. That is exactly what we should do, especially right now. It's tax time. Okay? Go put up $500. And don't look at it till next year for your 2 or 3 year old. That is a hefty policy. Go put down that. Look at it till next year.
That is.
Next year we'll have some money, and we're talking about when they get old enough to go to school and need a car, they will have the cash value there waiting.
So it's like a savings account.
Yes.
That's pretty good, and I'm glad that you brought that up. That's a great way to save. So if you have that lump sum, for some people who have it and don't know, I'm mad about that. I'm mad about it. I'm like, what? What do you mean? But or that stimulus, even though we're supposed to stimulate the economy, just take whatever it is and pay it up for the year. And then it won't be like, okay.
You're a person that doesn't like to look at this bill every single, my grandparents, stop buying tennis shoes, don't get a policy. That's what we don't do that others do.
So what's the smallest policy that your company has? Ballpark.
The policy is small as you want. Small as you want. 7,000, 5,000.
There we go. I'm like, I'm not talking about the egg crate policies. I'm like
some people say, they come and it's like, well, Bonita, I ain't trying to make nobody rich. I just need enough to bury me, That's what people call a burial policy. It's just a small policy.
Okay.
Which is about $10,000. That's what it would cost to bury or cremate someone. Because I remember when people didn't talk about cremation, that has become more popular just because of the price of funerals and people aren't prepared to pay.
Right. Now, so a small policy, $7,000.
Mm-hmm. And which really ain't going to do a whole lot for you. But
it get you in the ground. Okay.
No, that'll get you cremated. I don't know if you can get buried for $7,000 anywhere. No.
Oh, it's like that now?
Oh yeah.
Oh.
12,000.
I used to sell cemetery plots.
Oh, did you?
When I was at YSU, I'm like, and I was good at it. I was like, I can't believe I'm selling cemetery plots. So I know that was $400 way back then.
Right.
That's just the box. That's not the casket. That's just the seal up. So you need 12,000 now. Wow.
That's why everybody's getting cremated. Now, my mother has always said that she wanted to get cremated, always before it was even popular.
Mm-hmm. When she say, yeah, they ain't gonna fix me right. But listen, the way they doing them bodies, some of these, listen, that's a shame. But the way some of these bodies coming out, look at that.
That's what I do too.
Let me 16.
It's like, look, having people looking at me looking crazy.
Right, they ain't gonna be able to do my makeup right. Like, no, that's all right. Put a picture up. Do what you gotta do. Call it a day. Do something. I don't know.
Her as she was.
Right. I wanted to ask you about what if you paid for your policy years ago and then the company goes out of business? Then what?
Somebody, when you buy a policy, it's called ISAOA. It's successors and or assigns. which means that when that business goes out of business, they would more than likely sell it to somebody else. Another company would pick it up.
Oh, well, I need to look around then, huh? Mm-hmm. I know you're like, what?
Policy now, if you look in there, you'll see.
Have to locate
Or
it.
Just transfer over
to somewhere else. Okay. That's good to know. Now back to the come up. So now it has to be someone that you actually know in order for you to carry insurance on the person.
Unless they give you permission or you have some sort of custody of them. You have to have some sort of financial interest in that person. I adopted this kid. I'm taking care of him.
So let's say it was a grandchild. Okay, so if it's a grandchild and
they're under 16, the mom just needs to, unless you have custody, you have to have custody. Mom needs to give consent. If they're over 16, then they would have to sign too.
Okay, let's say this.
But you
what
can't even
was Ben? I don't have an insurance policy on you, but I'm just for the sake of the conversation. Let me let him know that because he'd be like, "Wait a minute, she got a policy." But was Ben? That's what I said. Okay, so some people have policies on their ex-husbands that they hold on to, and then they're divorced, and then something happens, and they looking at, like, you done married somebody else. Why you looking at me for? How does that work? Like, shouldn't I be able to cash in?
Well, yeah, you still own that policy as long as you're still paying for it and it's active. It's yours. It doesn't matter.
What you do with it.
What matters is what was going on when you put it in force.
Okay, so if we're married and it's already done and you just hold on to it, if they've moved on and married somebody else and then something, God forbid, something happens.
Yeah. Unless, of course, something happened to him because of you, didn't it?
Well, I'd be like, right. First 48 or doggone lifetime, y'all be watching it, you'd be like, that's a shame what happened.
Like it's that.
That's mail. What the heck? I just wanted to know, and these are the questions that a lot of us want answered. And when you do have money, I know I've noticed this with us as well. When we do have, and you want to do right, and your heart is in the right place, but the first bill to get cut is the insurance. Help me to understand it. You've been in it longer. Help me to understand that, because I've been sitting back thinking, like, I don't think I would pull that back. Like, I can't get my hair done this week, sis. That's the one that I would actually go ahead.
See, that's me too. See, now I wear it. Heck, I've been wearing a ponytail for the last 6 months. But yeah,
right. You ain't lying for ponytail.
Ain't no priorities, and it goes back to what you said earlier about people that it seems like it would be embarrassing. It's not. You have to take pride in knowing that you've done what you can do to not put your family in that position. Then you're being selfish too. At that point, if you're putting your family at risk, when you can skip a hairdo or a nail appointment, priorities. It has to matter to you. They have to matter to you.
Right. Look, and coming up in the church, how many Sundays we heard we don't know the day or the hour?
Everyone.
Right. So it's like, let's have that together. All right, let's move to auto insurance. The same thing. It's like, I don't have it. Instead of taking your income tax or getting jacked for your income tax and falling in love with somebody that know ain't gonna see you. Came on the scene. I'm gonna be quiet. Came on the scene in November. You know what I mean? And then they're gonna leave after February. Instead of spending all that money or having somebody flip, because I'm gonna keep it 100, flip your taxes or flip your money. If you take that and pay your insurance, your auto insurance up for the year, that's a bill that you don't have to see.
Absolutely. And if you're not one and you don't like every month, that little $20, $25, $30, $50, $100, whatever it is, pay it off. Pay it for 4 months. Pay it for 6 months.
See, that I'm that person. I'm like, please, let's just get it out of my face so I don't have to see it. And then I feel like, even though, like, I could be making the same amount of money, But in my mind, I got extra money to spend.
Right.
You know what I mean? It's like, oh, okay, I got extra money. Oh, good. And I'm looking at my bank account like, boy, this is really, really nice. I was talking to a friend of mine, and he said to me, we got to hurry up. Look, I'm like, look, constantly talking to you. He said to me, he was like, Mel, you were right. It's such a different feeling. He was like, I got thousands of dollars in my bank account. I said, it's all about rebooting your hard drive and how you look at things and how you think.
Absolutely.
And he said it feels so much better. He was like, I could just go. He said, and I don't even want to spend it. It's there, though, when you need it.
Yes.
And just like you were saying, it's nice to be able to say, okay, well, I can go and get that dress and I don't have to wait until payday.
Or even if something happens, I can fix it. I can handle this, you know.
Woo, being a homeowner, child, listen, everything in the world. Now, home insurance, I want to touch base on that. I got to get you to come on the other show on Shop Talk with Mel, because I know that there's like, my co-hosts, I have a lot of questions too. Home insurance, home versus renters.
Okay.
Talk to me real quick.
All right. Homeowners insurance covers the house, the structure itself, and the belongings in the house. Meaning your clothes, jewelry, furniture.
Not the tree outside that fell down.
Yes, that too.
Okay.
That too. Now, renter's policy just covers your personal things, just your items. That's it, nothing more. The structure, the house itself, would be up to the landlord to get a policy on, which is a landlord protector policy.
Okay, and that's up to the landlord to get that.
On the outside and nothing on the inside.
So if somebody falls coming on the porch and you're a renter,
that's liability. Now, all policies have liability included.
Mm-hmm. Okay, interesting. I had somebody come over to my place some years ago and fall down. Oh, yeah. Now, me being me, she was like, well, I need your insurance information. You don't need anything because I didn't invite you. That's me. And that's the truth. And she got up and got in the car. Nobody even told you to come over here. Like, bye. Like, you weren't invited. So my mom, I am who I am. My mother is she's a lot nicer. And she was like, that's not what, she was like, I said, I'm not giving her my policy. Like, if you saw something wrong, it was icy outside. If you saw something wrong and it snowed at that time, I'm at work. Can you imagine being at work? They calling me on the phone talking about something. They need your policy. Oh, why are you even there? I didn't invite you. Nobody invited you. How about that? I said goodbye. She didn't get my information either after that. And she didn't come back. But you're a guest of a guest. And the guest shouldn't even came, but she was my sister. So, but you came with her, and come to find out, that is what she did. That was like her come up.
Oh, that was her little
come up. But she got mail. Go, bye. I didn't tell you to come over. You ain't allowed over here. Get out of here. Like, bye. Right. Hustling people.
You have to be time for that, you know, insurance fraud. That's not small.
So that's called insurance fraud?
Well, yeah.
Okay.
Yeah.
Okay.
Around doing this here and there. Oh, yes.
Okay, so they will be able to track the same person? They'll you know what I mean? How does that work?
So you would have to prove that this person has done this multiple times in order. There would probably have to be some sort of pattern. Mm-hmm. Or somebody would have to know that this individual staged it. It would have to be proved.
I just thought that was like in that city. And then my sister, she was like, well, you don't have any salt. So she took the Mortons out the cupboard, you know. So they started sprinkling. I said, I'll bring it when I come home. But no, why is she in my house anyway? And I am that person. If I don't invite you, don't come. And if I invite you, don't bring a guest. Because I didn't invite them, because both of y'all can go home. And that's for real. That is for real. Listen, is there anything else that you want to discuss? I hate that it's an hour show, but I truly appreciate you coming on Brown Skin and look at this phenomenal woman.
Just trying to tell the ladies, get your coverage. Your son out there in the world, get your coverage.
Yes.
Get your coverage. There's nothing wrong with it. Like she said, we know not the day or the hour. Be prepared. Be prepared.
You definitely.
Especially these young men. Come on, $25, $30. I call myself cutting my nails down myself trying to escape. It still ends up costing $30, $40. I don't care what I do.
Ask the studio audience to calculate this for us real quick. A small policy for 1 year, how much would that be a month?
Well, that depends on the age of the person.
Okay, let's say 25. We're going to go with 25 since the Brazilian butt lifts is what's out right now. And they're getting their boobs done and stuff that I saw on television that I thought was $1 million. I didn't even know you can make payments.
25-year-old can get a policy very inexpensive. That is extremely young.
And it's $3,000. Listen,
sorry?
the Brazilian, the BBLs, the Brazilian butt lifts is like $3,000 to $4,000. They was like, oh, it's only. See, that's why I asked you. I was like, oh no, this is good. It's only $3,000 to $4,000, but how much would it be for a small policy for the year? Because let's be real. Who is it? Kanye West. His mom, she passed getting cosmetic surgery. Like, that's real.
Well, what is his name? The Wakanda dude.
Wakanda? Who?
Yeah.
The one that passed away?
Yeah.
I can't even think of his name right now. Oh my gosh.
Yeah,
Listening audience, y'all Chad with him.
Chadwick had no coverage.
What?
He had just gotten married. His wife, I think she's been scuffling and scratching, trying to get what he did have. Trying to get free from that estate.
Wow. That necklace is giving me Wakanda vibes, though. Hey! Wow. He didn't have any coverage. And you would just think that they would.
It's what we said, though. It's the appearance. So we don't get all of our affairs in order. It's just, I just have to look like it. I need my shoes with the red bottoms on them to make sure that somebody else says, who the heck looking on the bottom of your shoes?
You ain't lying, girl. Mess around and paint them. Paint the bottom. But like, what look you looking for?
As long as they don't hurt me, I'm good to go.
Yeah, now I'm with the hurt. Back before feet used to be hurting, I used to take ibuprofen.
Shoes, I don't do that.
Look, I used to take ibuprofen.
I don't break in men or shoes.
But like, oh, I'm wearing these shoes. Let me take the pain pill now so that I can walk in and look slick, okay? And give my other half, my other shoes put them under the table. You walk in with these. I'm gonna walk in with this. You walk in with those. Okay, we in business. Thank you so much, Mrs. Bonita Starkey with Keystar Insurance. Please visit the website. All the information will be below so that you can reach out and speak to her. Like I said before, it is International Women's Day. And what better way than to introduce Miss Bonita Starkey?
Empowered, yes.
Definitely listen, I'm empowered every day.
Yes.
We know that. And March, you ain't got to tell me, just March to recognize women. We already know. Recognize me every single month. Okay? And is there a men's month?
Short areas.
All of them.
But they always say that Father's Day doesn't get
only Father's
Day as Mother's Day.
Every day is Men's Day.
Oh, I hear that every day is Men's Day.
It is. I mean,
is it really?
Enforceable.
Yeah, I guess it is. That's probably why they only have Father's Day, though. Because, like, their birthday, we'd be like, oh, happy birthday. But our birthday, oh, you better go out or there's going to be some issues. Valentine's Day, oh, poor guys. But anyway, celebrate us. Live studio audience, celebrate her. I know you do every day because I see you guys out and about. So that is, and I want to say,
so we going out to enjoy the sunshine today.
And happy belated birthday, live studio audience. I did notice. Today's guest, I want to thank you so very much. This is Brown Skin, the clear and uncut conversations about us. Today's guest is Bonita Starkey, the CEO of Keystar Insurance, and she sells home, auto, and life insurance, and also specializes in financial literacy and building wealth. And again, give us that information for the webinar.
The webinar is on March 20th Saturday, March 20th at 1 o'clock. And you can apply for it. It's free. You can apply go to the website, www.keystarinsurance.com, and you can apply there under webinars. It's called Get Your Ducks in a Row.
Get your ducks in a row. And I'll also have her information. I'll also have her information on my website, which is Shop Talk with Mel. You know, follow your girl on all socials at Shop Talk with Mel. Google me. You already know you can find me everywhere. Okay? Isn't that such a blessing? All right, lovely Bonita. Find you, embrace you. Most importantly, always, always love you. Until next Monday, 4 p.m. You're listening to Brown Skin.